So around 2 months ago, I did a video on Enphase stock, and I said the stock looked too expensive, and I gave my own fair value of around $103 per share. And of course, I got a lot of comments as usual saying Enphase will never go to $100. It's not happening. It's a growth company and all these kind of things. Well, 2 months later, Enphase is now sitting at $135 per share, and $100 per share is looking more likely than it did 2 months ago. And the stock is down over 60% from its all-time high. And I'm personally getting very interested in this company, not just in this company, but a lot of the solar stocks. If you remember, even in 2022, the solar stocks were pretty much the only stocks that can't go down. We had a lot of stocks, the Cassie Wood stocks, down 60, 70, 80%. Yet Enphase was making new highs in 2022 whenever everything was going down. I mean, these stocks were the darling of Wall Street, the darlings of retail investors. Most retail investors own the solar stocks, but now not a lot of people want them anymore. And I'm personally starting to get interested. I'm planning to buy a solar stock in my portfolio, but I'm still looking. I'm looking in First Solar and Enphase and a lot of the other kind of solar stocks to determine the best one. But in this video, I'm going to do my best to give you an update on Enphase, give you the bullish case and the bearish case scenario in terms of my fair value and a buy price for Enphase. And I'm going to do my best. And I have to admit that I'm not an expert in solar technology and electricity and all these kind of things. So I'm not really an expert, but I did some research and I did some valuation numbers, and I'm going to share them in this video. But Enphase, I mean, it's a pretty amazing company. They have a very high market share in terms of the microinverters. This is pretty much their flagship products, but then they expanded to so many other things like the EV chargers and the batteries, the controllers, the heat pumps, the utility meter, pretty much everything you need in your house to run the solar stuff, anything to make it more electric, more energy efficient. Enphase actually can solve this problem. And over the years, they have expanded in a lot of different areas. As I said, they were just microinverters, then they went into battery and a lot of other things. And this is a pretty interesting graph which shows the share of wallet per home, meaning in 2019, Enphase could make around $2,000 per home. In 2021, they expanded a little bit more. It's $9,000. Now it's around $12,000, and they pretty much do everything, which would question my, Enphase expansion in the future if they can expand in different things. I don't personally think so, which is why the growth has been slowing down. It slowed down a little bit. It was, growing 97% in 2019, 78% in 2021, 68% in 2022. Well, now it's around expected to be 13% and then around 25 to 17% in the future. So the growth has slowed down a lot, and Enphase was priced to perfection, and the stock is down 60% from its highs. And in my opinion, the stock is starting to get very, very interesting. Now, in terms of the earnings report, I mean, it wasn't really bad at all, in my opinion. They did, revise the guidance. The company experienced a 12% decline in revenues in the United States. They kind of blamed it on higher interest rates and a different macro environment, which I agree with. I mean, the interest rates are high in the United States, but in Europe, they grew around 25%. Now, I'm not sure why would they grow in Europe and not the United States. I mean, Europe also has, higher interest rates than they had before. Maybe not as high as the United States. I would also say that Europe's environment might be a little bit more challenging than the United States in terms of the inflation over there, especially in the UK. It's very, very high in a lot of other places in Europe. So I don't know why they would grow 25% in Europe and they would decline in the United States. This is something we have to concern about. I don't personally believe it's just because of higher interest rates and macro environment, because Europe's macro environment is not that much better than the United States, in my personal opinion. So I think there's a few more things to do with it. I know there was something with the microinverters, some law that they had to change. They changed some of them. So this has also contributed to that. And the company is also growing in Australia. I mean, maybe it's just some expansion. They doubled year on year. So they're growing a lot outside the United States, but they did decline in the United States, and the growth outside the United States is actually offsetting the decline. Again, if you're a long-term investor with such news, I mean, Enphase is still growing. It's not declining in revenue or anything crazy. It's just the growth growth has slowed down. And this is normal. You're not going to expect Enphase to keep growing 68% or 78% or 97% forever. This is pretty normal. And this is, in my opinion, what normally creates opportunity with a lot of those growth stocks. Whenever they've been growing so much and then the growth slows down, everyone freaks out. Like what happened with Tesla. It went to around, pretty close to $100. I actually sold puts on $100, but I never got assigned on Tesla. I did make a pretty good return on the premium and stuff. I never got assigned, but this was the same setup as I see with Enphase, in my opinion, which is why I'm very interested in the solar stocks. Now, if you look at the forward PE ratio of Enphase, it looks around 26.5 times earnings. A lot of you are going to tell me about the stock-based compensation, which I do talk about in the videos, and I'm going to talk about it a little bit more. But if you look, it's around 26.5 times forward earnings, which is actually not bad at all. If you look at the 5-year kind of horizon in terms of the forward PE, it's trading at the lower end of the range. The company went as high as 118, 120 times forward earnings, and now it went all the way down to 26.5 times earnings. So this is a much better price for Enphase. But this is the problem with Enphase and a lot of those kind of energy and tech stocks. There's a massive difference between the EPS gap and normalized. I mean, if you're valuing Enphase on the normalized EPS on $5.06 for 2023, you're going to get 26 times earnings. But if you're using 345, you're likely going to get something like 42 or 45 times earnings, which is a massive, massive difference. But this is what we have in 2022 and 2023. Wall Street is using adjusted numbers. The analysts, they're looking at companies on adjusted EPS. No one's using GAAP EPS anymore. People on YouTube, they always use adjusted EPS. And everyone is using adjusted EPS, which is why I'm going to have to use adjusted numbers in this video, because this is what everyone is using. But you have to always pay attention to those things and pay attention to the stock-based compensation, which has actually been skyrocketing with Enphase. Now, whenever you see the stock-based compensation this high, you always have to look at the shares outstanding to see if the shares outstanding are expanding like crazy or not, and if you're getting diluted or not. Now, the good thing with Enphase, this is not the case. The shares outstanding have been pretty much flat to, slowly rising, nothing too major. This is because the company does buy back a lot of stock. You might see $1 billion buyback announced by Enphase. This is not going to kind of help you anyway as a shareholder. It's just going to offset the dilution from the stock-based compensation. But to say the least, Enphase shares outstanding are not going up. And this is something good for shareholders. But I'm going to get into my valuation model to determine if my fair value is still $100 per share or if this has actually changed. Now, if I look at the gross numbers, I am very concerned about the decline in the United States, which is why I had to lower my gross numbers. In my previous video, I had 20% for the next 5 years. In this video, I put in 15% for 2023, 2024, and then 20% between 2025 to 2027, which I personally believe is fair. Now, if you look at the analyst numbers, they're expecting 23% and 27%. I'm personally not willing to bet on that. I think this is a very optimistic scenario. But if we just take the high interest rates and we assume they're going to stay high until 2024, we can, conservatively say that Enphase could grow around 15%. And as rates come down into 2025, which they will come down, maybe this will help a lot of the, people that are putting solar. Maybe they get 0% interest rates or low interest rates to do these solar projects. So maybe it could reaccelerate between 2025 to 2027. And I personally believe this is a very fair outcome, especially looking at Enphase growth. We're not putting in 68%. We're not putting in 78%. We're putting in 15 to 20%. And most of you can agree with me that this is a very fair estimate. Although it's all guessing. We can only guess. No one knows for sure. But we always try to come up with the best, with the most accurate scenario. Now, the net income margins are 25%. I kept them at 25%. This is, again, normalized, which is adjusted, net income margin, including all the one-time expenses, all these kind of things. And this is what Wall Street uses, so I'm using them too. And I put in 25%. PE ratio, I put in at 25 times earnings. I believe 25 times earnings is fair in this case, although it's on the higher end. So for me personally, if I want to buy Enphase to double my money, I would have to buy it at $122 per share. If you buy it right now, you get around 75% on the upside, or around 11.9% compounded every single year for the next 5 years. This is not a bad return at all. But I personally have fears that maybe the growth is going to slow down even more with Enphase, which is why if I use something like 20 times earnings, which is a very conservative estimate, to me this is pretty much the base to worst case scenario, is 20 times earnings. I don't see Enphase trading below that. But if I use 20 times earnings, I get get 40% on the upside. And if I want to double my money with that, I would have to buy it around $97.63 per share. So on the best case scenario, I have here around $120 per share, which is not far from here at all. In my opinion, it's very, very possible. On the worst case scenario to base case scenario, I would say around $97. So for me personally, I would be extremely interested in Enphase. The closer it gets to $100 per share. But if I had to, kind of bet on it, I would not mind buying it at 120. But if I want a margin of safety, if I want something that's the closest thing to accurate as possible, if I want to price in some potential revenue declines and a lot of things that could happen, for me as a base to worst case scenario, I would love to buy Enphase pretty close to $100 per share or below. I think there's extremely bad sentiment with this company. I would not be surprised if it starts going up around 120. It never gets to 100. It's possible. But I just really like the setup here. It just reminds me of Tesla when it was going down. No one wanted it anymore. And Tesla had a bright future. And I personally did not get assigned on my puts. But I'm trying not to miss out on that with a lot of the solar stocks, which was why I'm trying to analyze to see which one is a better solar stock. But this is what I think about Enphase in general. Thank you for watching the video. No financial advice, of course. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another one.